And I think we are live now, so we'll go ahead and start. Today, the Harvard Alumni Entrepreneurs is happy to welcome you to the 2020 Fintech series, the first of a series of webinars over the course of this month covering various topics in the fintech world. Harvard Alumni Entrepreneurs, better known as HAE, is a global community with 14 chapters worldwide across various cities that hold local gatherings, at least during the times when we can hold local gatherings, and connecting 14,000 Harvard alumni regarding issues of entrepreneurship and innovation. You can feel free to join by registering at harvardae.org. And one of the things that the organization has been doing in spades lately is running a lot of fantastic online programming. I'm a fairly new member in the HAE organization and have found the webinars to be fantastic. So I'd encourage you to take a look at what's available. Now for today's topic, we're gonna do this preliminary exploration of the fintech industry post-COVID. And we're looking at it a lot in part through the perspective of some of the large industry players out there that work with various ventures in this arena. And today we have three fantastic panelists that I've been happy to get to meet through this process. The first is Catherine Van Nuys, who leads the FinTech Startup and Venture Capital Development Group for Amazon Web Services. Before AWS, Catherine has worked for a couple of FinTech ventures, and before that, she worked in the epicenter of the last financial crisis on Wall Street for Citi and Lehman Brothers, and today we're gonna make sure she helps us avoid all of those landmines that she's seen. The second panelist, Jean Donelly, is the Executive Director of Fintech Sandbox. Fintech Sandbox is a Boston-based nonprofit that supports fintech ventures, and their main point of leverage is helping ventures secure access to data feeds and infrastructure support from industry partners who want to help cultivate the fintech landscape. Jean comes to the industry after a career at firms like Fidelity and some other financial firms, and before that, comes to the financial industry from the engineering world, working on aircraft engines. And from that work, she told us she can describe how an air turbine engine works in 4 words. And Jean, I'm going to let you rip on those.
Sure. So probably the one thing I retained from that period of time, it's suck, squeeze, bang, blow.
All right. And so yeah, we're going to figure out our way to start to define the fintech category, hopefully as succinct as that. And let's see, third of the panelists, Anthony Termini, the Senior VP of Business Development for FinTech Alliances at Morningstar, one of the giant financial data firms. And I couldn't help to do this, but when we were introducing each other, Anthony shared this with us. And I think he is, I hope everyone is able to, hold on, let's see the screen here. Yep, click here. And Anthony is the only holder of that Vandy plate in the state of Illinois. And as we think about what categories boom or collapse, we're all rooting for Anthony that in 5 years, he won't be embarrassed driving a car with a plate that says FinTech.
It's for sale, by the way. No, it's not, just kidding.
So, and I'm James Chung. I'm a partner in a venture that delivers data science as a service, DSaaS, for the real estate asset class, which is how we're engaged in the fintech community. So we got a ton of questions. We had really strong signups today, and a ton of questions came in advance. So we're going to start ripping through these questions, but along the way, do feel free to enter questions into the chat function. And in the chat function, we'll try to keep an eye on that to see if there's anything, but we will also try to just go through a lot of the questions that came in beforehand. So the first of the questions I want to throw to the panelists is that we're all living in a very different world than the one that we knew at the start of the year. And given that each of you work a lot with fintech ventures, what are some of the biggest shifts in how you're dealing with ventures now that the world has been turned upside down compared to back when the world used to be semi-normal? Do any of you want to take a first stab at that question?
I could take a, oh yeah. So at the Sandbox, we've worked with about 200 startups since we started 5 years ago. And so we did a quick pulse survey in late April of the startups, just to get an idea of, what are the things that they're dealing with, and how are things changing. And I think for a lot of folks, it was understanding how much runway they have, right? And really kind of doubling down and understanding their finances, and could they continue along the path that they had in terms of partnerships and plans, or did they have to, make a course correction or change? And so what we're finding is we've seen some that have been able to pivot in terms of the types of solutions that they have, and how their solutions are used. And then others that are able to kind of stay the course because, their traction that they had with some of their customers is continuing, because they are considered core to the customers that they're working with.
Yeah, and I think for us, having worked with startups from very early stages all the way through, we definitely saw, immediately an increased need to focus on cost any way that they could reduce cost. And I think that's something that's always important for us. At AWS, we're always looking for ways to, either we reduce costs on our services or working with customers on cost optimization, but that was definitely front and center. And so kind of working on, working in one-on-one with customers and the solutions architects, kind of look through their architecture, find out ways that they could not spend $1 more than they really needed to. And then we put out a lot of content and through webinars, and happy to share a link after on just kind of easy ways to kind of look through and reduce your costs running. So that was sort of one thing that was just more immediate. And then, the other thing that we saw was really working, like there were some opportunities that came up also as a result. So for example, with the CARES Act, we had a core banking startup that needed kind of work directly with our financial services experts, because they were helping a few banks in order to be able to take the applications and process and then send out money to the small businesses that were looking to get capital. And so we both saw kind of costs, and then we saw other companies that were really ramping up, and timelines got dramatically shorter, and kind of came in and did everything we could to support them and as quickly as possible. So and I think just generally when you look at AWS and the services we could provide, the ability to really scale up for the companies that are seeing in, Zoom, but we also have an app like Propel, it's food stamp application. Unfortunately, there's increased demand for their services given the situation. And so they're seeing a ramp up, and so we're working with them to kind of help them scale up. And likewise, companies that are seeing decreased demand, kind of reining in their capacity so they can kind of better meet the needs of their customers. So that's just some of the things that we're doing now.
And Catherine, before Anthony jumps in if he wants to, I just wanted to say, if you are able to share some of the information of tips that AWS is providing to help reduce load on AWS servers, that would be tremendously appreciated. I know my venture is in the midst of some of that optimization as well too, and I'm sure a lot of others are too. So that'd be great.
Happy to.
Anthony, did you want to take a crack at ways you're working differently with ventures now versus in the more normally times?
Yeah, I think, I put this in my LinkedIn post. I'm probably going to double down on it. I think we've entered a new era of simply a new era that requires resilience, its adaptability, and its empathy. Resilience meaning that these companies need to quickly be able to recover and have leadership in place that has kind of been through maybe not this particular storm, but a storm prior. Maybe it was the Great Recession or another economic downturn, and that know quickly how to move forward. And it's the ones with the strong VC backing or the alliance with a partner and maybe less of a vendor. I think adaptability is key. The ability to not only pivot your product, but pivot the message that you're delivering around the values that your products bring to the market. And then from an empathy perspective, just knowing that we're all in the same boat moving forward. We're all living in the same pandemic life that we never imagined, right? And having a good framework to understand your customer and what they're going through. I had a particular engagement that was looking for some significant cost savings, and if they couldn't kind of renegotiate their terms, they'd actually have to lay off a few individuals, and that's not something that we want to have. We don't want to have that sort of conversation. We don't want to be the problem behind it. So we quickly came to a common ground on how to restructure our arrangement to make it beneficial for both parties, to say, we don't want you to have to make changes to your employment. We will work through this together. We want to be a long-term partner with you. So it's certainly been requiring adaptability and flexibility and empathy for customers.
Okay. We had a handful of questions come in regarding COVID-related issues. So I'll focus these first handful of questions on and stay on this category. And one of them is from Chit Kwan Lin. Chit Kwan, I recognize that name from the past. I would love to hear from you after this to hear what you're up to these days. But he asked a question that's sort of a good overview question about the field and then a specific COVID question. And that is, can you please talk a little about the data provider ecosystem in general? If any of you have any interesting frameworks as to how to sort of lay out the system. And then he has a sub question of whether budgets for data sets may be affected by COVID-related belt tightening. If any of the panelists want to take on any half of that question, that would be great.
Yeah, I don't know, Anthony, if you want to go first or I go first.
Jean, you go ahead.
Okay, I can give the perspective that we see. So where we're trying to do is help startups get data. So part of it is what are the data sets that are critical that can be the most helpful. And I think, data is expansive, right, in terms of the universe and the areas. When it comes to fintech, I think, fintech is born, financial services runs on data, right? It's the lifeblood of the industry. So we kind of look at it as if you start with the capital markets arena in terms of, how do the markets run? What is pricing? It's kind of real time and historic data and all the intricacies that come with it is one area that, is probably the biggest area for fintech. It's also a pretty robust ecosystem in itself. In terms of the folks that work with large financial institutions in order to help provide that sort of data. Then we start to look into other areas. So as you think about more of your consumer-facing products in fintech, you run into aggregation, right? So looking at the aggregators who can create that viewpoint of the customer where you can collect the information from different sources and see a viewpoint of the customer, like a PFM type of tool. Then we also move into kind of the lending space. So if you think about the credit bureaus from a consumer perspective and having the ability to look at that sort of area, which also then leads you into the transactional data. So what are the consumer behaviors looking like and how is that influencing their activities when it comes to financial activities? And then underlaying that, now you have the whole massive world of alternative data. So how do we think about unstructured data, right, or data exhaust even, if you will, and utilize that when it comes to creating financial services products. But I'll let.
That was a great intro, and just in case, because I had a very super quick introduction of Jean, and I just want to say the value creation that's happening at Fintech Sandbox is pretty profound, given that financial data is about the most expensive category of data that you can get, but they're providing access to early stage ventures to go play and experiment with that data to see what kind of value can be created with it. It's pretty cool what they're doing. And Jean, I'm probably going to be checked in with you afterwards about that. It's just wicked cool what you guys are enabling. Anyway, any of the other panelists want to take a crack at either the data provider ecosystem or about how whether budgets for data sets are getting affected in the belt tightening era we're in?
Yeah, just to add to that, Morningstar has been a longtime partner with Fintech Sandbox, data partner for years now. So that's a relationship that we certainly appreciate. And Jean has tons of experience working with lots of different providers. I think just when speaking to the ecosystem, as you're a fintech looking to identify the right partner, there's certainly you want to go with one that's maybe best of breed or that is going to accomplish the same, to get you to where you want to be. But I think it's also important to look at what they stand for as a partner. Morningstar has this ambitious goal and mission of empowering investor success. And there's lots of times where we simply won't take a deal, an opportunity, if it's not in the best interest of investors. And there's lots of ways to kind of use information or data that would kind of poorly impact markets or alter things in ways and directions that we don't want to go. So I think we are mission oriented. We're also global in our nature, reaching really every exchange on the planet. So it's important to find someone that's global and also mission oriented that can provide you kind of the service that you need to move your business forward.
Mm-hmm.
Great, and I think what I can just add to that is, so most of you are probably not yet familiar as we just launched it about 6 months ago at the end of 2019. the AWS Data Exchange. And I think kind of we saw that there was a real opportunity, well, a real pain point that needed to be solved around different businesses that were looking for data and sort of acquiring data from all these different sources. It was really hard to get. Some are like FTP, some are, you know, sharing them in Dropbox accounts, and sort of acquiring that data in a secure, compliant manner, and then using it was an incredible challenge. And so we launched the Data Exchange just to make it really easy to find, test, subscribe to third-party data in the cloud. And so we just really act as the pipes. And I think the you know, demand for that is immense. So we work with, you know, certainly Gene and Morningstar around sort of listing different data sets on there, and how can we, you know, we're working separately on how can we have lower cost options for Fintech. So what, you know, kind of leveraging some of what Fintech Sandbox has built and offering it easily through AWS. You can just immediately integrate it into your account. And so, you know, I think that what we're seeing is an increasing demand for, you know, everyone is looking for sort of the new edge, like sort of the unique data set that's going to give them an edge. And that's still, you know, always something that we're talking about, you know, with our certainly hedge fund customers and others, and even, you know, the fintechs we work with. And I think with respect to budgeting and cost, you know, I'm not on that team, so I'm not having direct conversations around the cost there. I would imagine just, and given the environment, there's, you know, cost tightening period. And so I think it's really around like the value of the data set, and are you deriving enough? So maybe there'll be sort of a slowdown and sort of the testing of new data sources, like temporarily for more cost conscious companies. But if it can give you an edge, generally, you know, this is an important part of the business. So I don't think we see the demand really slowing all that dramatically, at least not yet.
Yeah, I would like just add for that second part of the question, I think an interesting one to look at is if you think about Bloomberg, right, and the Bloomberg terminal that everyone, you know, lives and breathes on, and then you think about the competitors who have come up to the space, in particular money.net. So I think what's happening now is you have people taking a look and saying, well, what data feeds, you know, what data feeds are out there that I can get from other sources? And are there other sources that are available online, right, that you don't need to have access to the terminal, which everyone's been moving towards. But I think this type of situation has given, you know, companies like a money.net an opportunity to get additional market share for folks being able to say, hey, this is a lower cost alternative. And I can use that for specific data sets, not necessarily for all my data sets, but I might be able to use it differently.
Yeah, and you know, most recently we launched the Open Index initiative at Morningstar, and that's an initiative where we provide our indexes at no cost to fintechs looking to use them for benchmarking purposes. So when you go out and talk to a variety of the other index providers, they really will charge you quite a bit for that index, even if it's simply to display on your website or your app. So we have built alternatives to that to disrupt the market and provide some cost savings too.
Okay. We'll jump back to some of the COVID questions that came up that we're starting off with, but the three of you have worked together in various ways, each of you with organizations that tried to tie together large entities and startup entities to try to figure out how both can advance simultaneously. And since we have people on the call, both representing these large entities as well as early stage ventures, I'd love to hear any thoughts about examples of ventures that have done a really good job getting the most out of partnership with, with large organizations or through the entities that you work with. Have you seen any sort of just like wonderful examples of collaborations between these, between the established entities and early stage ventures?
So one, sorry, yeah, you go, Catherine. You go. Sorry.
Sure. Well, sure. You know, I think I can speak to one company. I think it's a different example than perhaps Gene or Anthony will give. But one example is a company called M&A Analytics. You're actually going to hear, I think, if you're joining one of these other sessions, the CEO speaking next week, and they're a natural language processing company. They were in the Fintech Sandbox, and so. We have partnerships where we work with Gene and the team, and then companies that go through their program also get access to benefits on AWS. So they get AWS credits, they get technical support and resources. And sort of through that introduction, we brought in M&A Analytics, got them credits, like worked through their processes. And then, they're taking advantage now of a number of different programs we have for just that, the idea of helping facilitate customer introductions, growing their business, thinking about enterprise readiness. And so I'll just mention two of the programs that they're looking at and working through. One is the AWS Partner Network, and that's like the actual structured go-to-market program. And one of the things we provide is proof of concept credit. So if you're going to go, you're a fintech and you're working with a big bank and you are trying to convince them or doing a trial to buy your product, you're going to be spending a lot of money doing that, and maybe you don't win. Hopefully you do, but maybe you don't win the business. And so providing credits against those types of POCs in order to sort of encourage our customers to run those, not run those at the full extent of their capabilities is really important to us. And then looking for ways to promote them through speaking engagements or speaking opportunities, or then actually just directly introducing them to specific accounts. And I don't think any of the enterprises that we've introduced them to are publicly referenceable, so I can't mention them on this call, but sort of they kind of came in through an early stage partner, took advantage of this program. We've helped accelerate some of their growth, and they're also listing on the AWS Marketplace, which is basically a SaaS store. So you can go on and look for different software solutions on AWS from other AWS customers. And so that's like another channel to even reach additional customers. And so I think, AWS is very big and large. And so I think the most successful ventures realize that there's a lot of different programs and channels, and sort of dedicate some time and effort to exploring those and working with us and sort of leaning into that partnership, because then we also lean in and really work together to try and drive business outcomes. So that's one example of a company that we've seen have a lot of success on AWS.
Yeah, I would also just tout in terms of Catherine and the team at AWS have done a phenomenal job of thinking about those building blocks of a startup as they start early stage and as they move, and how to get them to the point of being ready, and how to utilize the strengths of AWS to help them in that journey. So what happens a lot of times is a startup will want to work with an institution, and then suddenly they're like, all right, where's your SOC 1 and your SOC 2 compliance? And they're like, what? Or they're filling out the SOC 1 and SOC 2 that says, hey, share 5 years of financial history. You're like, well, I've only been around for 2. So really getting to the point of what are those compliance and technology, infrastructural things you have to have in place in order to be able to truly partner with larger financial institutions and understanding that environment. So, we've seen other institutions like, or startups like Elson is one that's based in Boston, who was one of the early ones we worked with that kind of came to us because they've built, a platform for portfolio managers to build models, right? And to build it quickly, to take whatever data sets they want, be able to build and replicate and test out models pretty quickly. They came to us because they wanted to be able to connect with a lot of different data sets, because they wanted to be able to say to whatever, customer, whether it's a hedge fund or institution, oh, you work with that data? Yes, we have that data. So as they were building this out, Thomson Reuters is one of our partners, and they were like, hey, we were going to build something like this. Maybe instead of building from scratch internally, let's see if we can figure out a way to partner and use Elson as a platform, and then put it in front of our teams, and use it from a product from our perspective. So for a tech-focused startup, it was a perfect opportunity to really, escalate and move quickly on the kind of sales and marketing front, and to get in front of customers. And really, I think it was challenging for them to get the growth and the customer experience to the point where they needed it, but it was a fantastic opportunity to do that.
Yeah, and to add to that, from Morningstar's perspective, I'm focused on adoption, but I will also act as that chaperone to help you navigate through the organization. So working with someone like AWS or Morningstar or other data providers, they're large, complex organizations that have lots of different initiatives, lots of different products and services. So having or identifying that person that will help walk you through the organization on who to talk to on the product side, who to talk with on the innovation or strategy team, who to talk with on the sales organization, so that they can also promote your product to their network. That's pretty critical too.
All right. Anyway, so this has been helpful as we think about, as obviously one of the big challenges of ventures is, how do you start to crack open this big behemoth world of finance, which each 3 of you are certainly making a lot easier. Now, there's the other end of the perspective of where we had a question come in about where we are in sort of the M&A landscape within the fintech space. This is a question from Sarah Emerson. There is evidence that started, and is this sort of premature? She asks, any risk of to stifling innovation too early, or is it the right time to start driving economies of scale objectives through M&A? I wanted to see if anyone has any thoughts on that.
Yeah, so I think when we look at sort of the big, more of the recent activity in fintech, one thing I think is it's partially a reflection on just the kind of maturation of the industry and where it's gotten to, that it has been, I got into, I think it was peer-to-peer lending back in when it was just sort of getting bigger in 2012, 13. And so a lot of those companies, like we just saw some of those firms now looking to get bank licenses and acquiring different companies. And then some of the big ones we've heard about, Visa acquiring Plaid and Intimate and Credit Karma. These were at kind of multi-billion-dollar valuations. And so, I think banks are still not necessarily it seems like early on, and I think we'll probably talk about this a bit more later, but early on they're looking more maybe to invest and test out and partner. And I don't think they're like their first instinct is just to buy that technology. And so I think in the case of those, the companies where we're seeing a lot of M&A, like they're sort of like more proven out products. So I for now, I don't see it stifling innovation. I think the concern would be is if, all these early stage companies, there's a bunch of acqui-hires or acquisitions of competitive businesses, and more of the acquisitions we're seeing has been around kind of things that complement their business versus like going out and Citibank acquiring a neobank that's competing with them, for example. So I think for now, I think it's a good thing because I think fintechs and founders want to see exits and potential to sort of grow their business and have an outcome, especially with the IPO market, I think being pretty slow right now, especially within fintech. And there were some sort of lackluster fintech IPOs in the last few years. So I think it's early days. I think we'll see more of this M&A happening, but I'll let my other panelists speak.
Yeah, to add to that, Q1 certainly saw a slowdown in deals according to PitchBook, but I think we're going to see that rebound and change as well as we see the numbers for Q2 come in. I think the example that you mentioned with Visa acquiring Plaid, that's a great example of a service provider being acquired by another service provider, and they're going to have tremendous scale with that. It might slow innovation a little bit, but I think they're taking a service and bringing it on the rails of Visa and their distribution network. I think that's pretty incredible. When you have a service provider getting acquired by a consumer that has consumed that service, it gets a little bit awkward of a situation where it's harder for them to bring that service out and about with other customers if they're competing. So I think it's to be seen how that sort of shapes up, but yeah.
I mean, I also just wanted, Anthony, like Morningstar has made some so thoughtful acquisitions, recently too, that in terms of how, do you have insight on how you guys have kind of looked at that or what?
Yeah, speaking to that, exactly. We made an acquisition during this pandemic, which is pretty incredible. We acquired a 700-person organization called Sustainalytics based in Amsterdam. They provide really rich environmental, social governance data on companies. And that's just a lovely marriage of transparency with Morningstar's mission and to really enrich and provide a new lens on sustainable investing practices for investors. So the way we approach investing is very thoughtful, very strategic, very long-term. So it's exciting to see some acquisitions happen during times like these. Yeah.
I'm going to throw a little twist to that question, and that is, has you in various capacities helped support various ventures that have gone from startup to exit. I want to turn the tables a little bit and ask, of those ventures that went from startup to exit, most of them probably didn't really understand. There are a lot of things those ventures did not understand when they started, but could only figure out after they walked through the fire. What are some of the lessons that you think, the unexpected lessons that they learned as to what made them successful in the end, that they might not have really anticipated or planned for? Or what were those lucky breaks or those things that they could only understand after, after living through the pain of it?
I would just say,
Go ahead. No, go ahead.
Yeah, I would just say that's one of the great things about my role at Morningstar, just seeing these new adventures, these new concepts, ideas constantly emerge and pushing the boundaries of investing in finance and moving money around. That's one of my favorite things is seeing these new things. And at first they can be certainly scary and weird. And it's like, you never seen something like this before, this new business model or this new product. you're trying to you're scratching your head on what the value is, and then you have to go at it with an open mind, and think about it from many different angles, and also take it back internally. So, I don't think, we at Morningstar don't claim to know it all when it comes to investing, and there's constantly new ideas being brought to the table. And it's important for us to keep an open mind and bring those in, internalize them, share them with our product leaders, because maybe aspirationally we're trying to do something similarly, or maybe this fintech is bringing us to the next level of what we want to do or aspire to do. So it's important to, I would say, just internalize those and keep an open mind.
Yeah, no, I think that makes a lot of sense. I was actually going, so Adam Brown is the CEO of Kensho, who we talked about earlier, who was acquired. And I think, I've had him speak on different aspects of it. And I think, there's a combination of understanding your customer, right? Like, and what their needs are and what you're trying to serve. They evolved to that point, right? To actually understand, hey, we have this amazing AI capability. What are the best use cases to apply that to, right? And how do you go about and figure that out? Then it also helps that you end up convincing Goldman Sachs that they're the ones that, that they see some power in this. And you're actually able to develop your use case with a pilot with a company like that, who took it into, their research team and to be able to use it for the analysts. I think that, allowed them to say, here's the capability and here's the breadth of what we can do. And, start with something narrow and then broaden it. And then in the back of your mind, always having that realization of the inverse relationship between yourself and if you're targeting financial institutions when it comes to time, right? Startups never have time, right? You're like, gotta move as fast as I can, gotta close this deal, gotta keep moving. The runway doesn't go on forever, versus institutions tend typically to have a lot of time. They have a lot of runway. They can be like, oh, let's take a look at this, And so really understanding that inverse relationship and figuring out how to maneuver that and to move, forward. I think Kensho also, at the same time they were doing that work, they had the Kensho box on MSNBC, right? So it allowed them to get visibility in other ways too. Now, is that the money-making product for them? No, but it got them, up and about. So realizing what are the ways that they can diversify in order to make that happen.
Yeah. Kensho was a fantastic example that went through Fintech Sandbox of went in fairly early. It sounded like that the partnerships were developed through Fintech Sandbox. It sounds like each of you have had a chance to work with them, and they had a spectacular exit and recently announced that they are a very core piece of S&P right now. Certainly it seems like where S&P is a lot of betting the future. So I wanted to ask you, I mean, that's a fantastic trajectory, but I wanted to see if any of you had wanted to take a crack at what's the next Kensho. It doesn't have to be like that type of product, but what are some cool ventures where you see have that potential to really become at the core of one of these giants and have that kind of trajectory? Was Kensho just a once in a lifetime miracle, or are you seeing signs of other things like that coming through the system?
Yeah, I mean, I can certainly speak to just a couple of companies and sort of trends that we're seeing. So one company that is also an AWS partner is a company called Tamer, and they basically help unify data so that companies can actually make use and have business insights out of that. I think that's one of the things that we've been thinking about a lot, is this idea of like AI, ML, and data. But the reality is, until you have all of you, especially these big institutions, until your data is in organized and in a place that you can actually make use of it, it's a real challenge. And so they're sort of a company that's targeting enterprises and working with some big names out there on like doing just that. And so I think they're sort of an interesting company, because I think they're kind of going to be core to helping some of these big enterprises actually start making use of those tools. And then sort of another company we're working with called Personetics is similar. They kind of help personalized banking. So they're using sort of ML tools to help some of these incumbents, more compete with the neobanks and others, sort of provide a better customer experience. And so both of those we're seeing get a lot of traction in the enterprise space. Whether or not one of them gets acquired by one of their key customers remains to be seen. But I think it's been interesting to kind of see them and actually kind of go through these very long enterprise sales cycles and have some success. So that's a couple examples of what we're seeing.
Okay, thanks. And I should give credit, that question was prompted by a question from Alexander Arbor on this call about early stage fintech companies that they find particularly promising. Now, I'm going to throw a different kind of question about fintech companies and want to see if any of you have seen any interesting examples out there that might be worth looking at. And this question from Mark Benson is, how will the global COVID-19 pandemic that has disproportionately affected poor communities and people of color transform the financial sector? Are there any financial products in development that might help address this that you've seen? Are there new products in development that might help transmit the information necessary to complete financial transactions a lot more easier for a broader audience? Are there any interesting things you've seen or interesting concepts that you've seen that might be able to bring lower cost, easier financial transactions to broader markets?
Yeah, so one of the areas, I mean, I think this is a huge, and this is the full opportunity of COVID brings to fintech, right, is to actually, you know, the access points to this population. Typically, companies like Catherine mentioned Propel earlier, right, they have a whole community of folks that they're trying to serve, you know, that are relying on food stamps and they're trying to get, you know, food sources, but they also have other needs. And one of the other kind of key areas is the, you know, the issue of emergency savings in this population, which right now is really critical. So we work with an organization called Commonwealth, who's part of the Emergency Savings Initiative that BlackRock rolled out, that is looking at, you know, 40% of Americans don't have $400 in their savings account. What are the solutions that can be there? And so one of the partnerships they have is actually with Walmart. So you think about, at the end of the day, a lot of it is what is that reach to that community? And then how do you understand those needs of that community and how do you meet them? And so if you think about, you know, Walmart employees, how do they have access? You know, one of the things that keeps a lot of LMI community out of traditional banking are the barriers of, you know, overdraft fees, right? Because if you don't know, if you have volatility in income, you do not have the ability to be able to handle the overdraft fee system. So you find alternatives. And so how do you create those alternatives for folks to be able to put their money in a safe place? How do you find alternatives to maybe, you know, supplement income 1 month because you know that they're not, you know, Uber's shut down, they're not able to drive, and then knowing that the next month they'll come back. So I think what we're starting to see is companies like that have that access, like Walmart, come up with these prize savings, you know, it could be prize link savings that encourage people to save and create those savings accounts that don't have those barriers. Or even Uber does that for their drivers, right? They'll actually credit their drivers up to $100, you know, so that then they can fill the gas tank so they can, you know, continue to drive. So I think you're starting to see people meeting people where they are, right, at that point in time and at that place when they're feeling that crisis and have that shortfall, and what are the solutions that can be, you know, provided to them at that point in time.
Yeah, I think just to add to that, those are all great points. I think another one is Chime. Chime has done a lot for helping their customers get early access and fast access to money from stimulus. That's been critical for them. Their customers are very happy with that, and they've seen leaps and bounds in growth as far as adoption. I think like we're all just living in such very distracted lives these days. Everyone is in the same boat, like you know, distracted with the day-to-day of just everything, right? So we don't have time to look at our credit card transactions or debit card transactions, validate that they're accurate or not. We don't have time to kind of like shift money around, or if we can put money into short-term savings, and then when that tops off, can we put money and afford money to put towards a goal and whatnot. So I've seen some good Silicon Valley ideas come out recently, and it's really hitting on the trend of what people throw out there as like autonomous finance or self-driving finance, where you have rules and AI and mechanisms kind of managing your money and your goals for you. So it can be more and more hands-off and more digital.
All right. We're going to jump back to one of the COVID questions also, another COVID-related question that is, have you seen any interesting ways that data in financial tech data has addressed or responded or helped firms navigate the impact of the COVID crisis? You know, whether that's on the health front or whether that's on economic fronts. Any examples have you seen of firms that have been able to you know, basically shift with these times and have, you know, and have product that was relevant?
So we've seen a few firms that have kind of like pivoted from, especially the folks that have a pretty solid AI basis, right? To be able to say, well, I have a pretty powerful tool. How can I use it to help, small banks and credit unions with their lending models, right? So going forward from this crisis, as we think about it, how you lend to small businesses is going to change, right? Because the path of a small business now has what historically would be, from an underwriting perspective, some issues. But how do I take this and look at it in the full, risk portfolio that I have and find different ways to apply it? So I do think we're seeing startups that are getting really involved in the risk analytics of banks and providing different ways of looking at that, instead of a bank just saying, no, I'm not going to lend anymore, right? But really saying, well, this is our community, so how do we serve that? So we've seen startups like Stratify and Boss Insights, a couple that we've worked with, that are kind of focusing in this area. And really what they're doing is they're looking at the data that they have from that customer, but also the greater data that continually changes to really inform these decisions and to create opportunities and options that maybe in the past they wouldn't be.
Yeah, Gene, I'll follow up on that. That's one of the things that we've seen back at StratoDem Analytics is the same too. Effectively what it is, a data science firm that's generating hyperlocal economic and demographic forecasting and analytics for the primarily for the real estate asset class, but now both it's being used by real estate investors as well as basically people dealing with real estate lending, trying to figure out which loans are going to be more likely to default or which loans are more likely to come through. It's certainly helped. I guess we're sort of at this era where there's just so much more data that can be generated, especially when meshing with other data with clients or whether, the kind of data providers that you're connecting ventures with. So it certainly opened up sort of a new, a new world. Any other thoughts on that last question before jumping to the next one?
Yeah, maybe just to add to that, specific to just market volatility and risk analytics, we definitely seen a spike in that. In the last several months, we've seen interest in our tick data. So when Morningstar connects to an exchange, we begin recording right away. So we collect every tick by tick of information, every message from the exchange, timestamp it, and it's packaged and sitting there in petabytes and petabytes of data. So it's a massive, enormous database of every tick movement on every stock or ticker across the planet. It's an incredible amount of data. So we've seen lots of interest in, I would say mostly AI or hedge funds or data analytics firms that want to backtest or correlate this with other maybe non-traditional data sets. Let's bring in the alternative data. Let's bring in like mobility data or other types of information to kind of augment those messages.
I'll add probably one more example that we've also seen is that journalists have been turning to this kind of data a lot. We end up getting tons of inquiries from journalists that were looking for better sense of economic impacts from COVID-19 on local market basis. And I suspect there are other fintech ventures out there that are probably sitting on a lot of data that is relevant in sort of the media food chain as well too. So, okay, I'm gonna switch gears a little bit. And by the way, as we're go 3/4 through the call, if anybody does want to introduce any new questions, we're still working on the questions that have come in before, but feel free to toss something in the chat box as well too. I'm gonna throw out a question about, this is from Jack Lee, who's curious about people's backgrounds who end up becoming tech founders or early employees in fintech. Just trying to get a sense of what areas tend to provide the sufficient exposure to the industry. Are you seeing more of them from the large financial firms or tech firms or VC funds or are there? I suspect the answer is going to be you're seeing them from a lot of different backgrounds, but I just want to see if any of you have had any interesting observations about that. Gene, I'm going to guess that you will probably see, you've seen dozens and dozens and dozens of founders come through there. Are there any sort of either unique clusters or patterns that you've noticed of folks who have founders that have launched their ventures at higher trajectories?
Yeah, I mean, I think one of the key things is most of the time a strong co-founding team has one person who's an expert in technology, right? And probably the newer technologies and the opportunity, and one who understands the business problem that they're trying to solve, right? Who either came from an institution that knows that, you know, this is a big problem that we face and it needs to be solved. I think when you have that combination is one that can move very quickly in terms of advancing, you know, their product. Obviously, if you've got founders that are serial founders, is also very helpful because they've been through it before. So in terms of understanding the path of how to move forward, even if it's in a different industry, can be extremely beneficial. I think in terms of the types of skills that, you know, they're looking for, is they're looking for people who A, share a passion about the particular problem that they have, and then B, can, you know, show some skills that can help them address that, right? So whether if they're starting initially with getting that first customer, right? You know, are they looking at that? Are they looking at how do I set up my services for that customer? So if it's a software product, what are the services that have to go with it? How do I administer that and how do I build that? And so I think that's what we've seen.
Yeah, I think I'd add to that. You know, I think that is one of the interesting things, you know, because we have all these early stage programs and we generally work with founders that come through a VC or accelerator incubator. And we do see, I think fintech kind of compared to other verticals has a lot of, you know, founders that came from the industry and so don't necessarily, like, don't always come through those traditional channels because maybe they're raising from angels or they have their own capital. And I think that's particularly true in kind of B2B fintech where, they see a pain point within their own business and sort of go out and try and solve it. And I think that certainly brings a level of credibility. It's a network and sort of helps you kind of win some of your initial customers. So I think we've definitely, you know, seen that. For example, Finxact is a core banking solution. They were sort of founded by sort of two brothers that initially built the core banking and then sort of spun out and then sort of built this afterwards. So I think you see that type of success. I will say though that certainly when there's B2C or more consumer facing opportunities, you really do see a mix. Even the, you know, Brex, for example, I don't know if you're familiar, you know, the founder, I think he was like in his early 20s, Henrique and Pedro, when they started that business and they sell to startups. And that's like an incredibly successful business, no financial services experience, but like great coders and super entrepreneurial. So yeah, I think James said it right, that it is a mix, but I think more so we see that kind of financial service experience, I think gives credibility. And if the founding team doesn't have it, they often will hire in that success. And that's certainly what we saw in the lending space was, you know, it was fintech, but there was not a whole lot like on the West Coast, but we would joke that was a little more tech and a little less fin, but then ultimately they hired in those experts to lead the capital markets in different parts of the business to sort of take that credibility out there to when they had to raise capital from banks and you know, other capital markets providers.
Yeah, and Anthony, did you have anything about that?
Yeah, if you're B2C, right, if you're targeting individual investors or consumers, right, you need to be able to track different metrics than you do as you go to B2B. You know, you're looking at daily active users, monthly active users. You want high engagement. Where if you're in a B2B model, it's a little bit different. I think diverse backgrounds, of course, very important to bring to the table. And I would say, but we still continue to see a lot of success at Morningstar from folks that have kind of been through it and been in the industry or come from the industry and they have the particular pain point, just like Catherine said. So Morningstar, we reach something like 250,000 advisors. So we're seeing a lot of advisors come back to Morningstar and say, hey, we've had a particular way of managing money or doing business, but we'd like to kind of test a new product or commercialize our ways of managing money. And so they'll come back to us and they'll leverage our data to bring and go to market and sell back to the advisor network that they already work with. So,
okay, regarding that question that came from Jack Lee, I'm going to give two quick plugs for some HAE events. I was on one maybe last month from the person who runs the Bloomberg Venture Group, who did mention that they actually have run a pretty detailed analysis of profiles that are most likely to end up launching venture-backed companies. And they use that to identify people in advance to build relationships with them. I should also add there is an upcoming HAE event, and I'm not sure exactly which day it is, but you might want to take a look at the HAE calendar, where Wan Li Zhu from Fairhaven Capital has also they're spinning out a new fund that has been doing a lot of data science work on trying to identify attributes of which ventures and which founders advance most. So it might be interesting to tune into that one as well too, if you're interested in that question, because they've been doing a pretty significant dive on that as well too. Now, as we're down to our last couple minutes, I have two questions left. One that came in about fraudulent activities in the payment space. Have we been seeing does anybody know if there's been an influx with these new fintech activities? Has that increased fraudulent activity? And the second question that came in on that was, or are there solutions that people have been rolling out that you've seen that can monitor and flag transactions that may be fraudulent? Any quick stab on that one that you happen to have seen for any of you?
Sure. So I think, in general, there's definitely there's a lot more payments, as we all know, happening online, given the situation. And so what we have seen is like just an increase in needs for kind of KYC, anti-money laundering type solutions. And then obviously fraud is a big part of that. So we actually, at AWS, we are launching a solution at I think at the end of the month, but it's in preview right now. It's AWS Fraud Detector. And it's just to help with just that, because we see a real need from our customers who are looking to solve that type of pain point. So that's when you have to bring your own data, look through, and we can sort of help find fraudulent activity. But we also work with a number of fintechs and partners that do that. So for payments fraud, for example, there's a company called Forder, based in Israel and New York, and similarly have worked with a lot of different retailers to help prevent that fraud. So we do see businesses leveraging fintechs to help combat that. It's definitely a big problem, but I think we're seeing real solutions that are helping there.
Mm-hmm. Okay. I'm going to ask a closing question for each of you, and that is, as we think about, hold on, I'm going to ask first off, a question that's sort of a 2-second answer. And as we think about this fintech space that sits on the back of Anthony's car, as we think about the world of fintech, what inning would you say that we're in before I ask my final question on this? Who wants to take a stab?
Well, first of all, I think it depends who you ask a little bit in the perspective, just because I think, there's a lot of financial institutions who would say that they're fintech companies, right? And have always been, because using technology to drive, the development. But I would say we're probably at I want to say we're at the fourth inning, fourth or fifth inning, because we really see that, the emergence of the additional, companies who can serve different problems, the changes in the market itself and move to digitization, it continually changes and evolves of what is fintech, right? Mm-hmm. 2 years ago, I would say real estate was a newbie, right? Yeah. When it came to real estate tech, is that fintech? Is that not fintech? I think now people are like, sure, that is part of the umbrella. But I think we're starting to see the maturity of the ecosystem of just how, almost a repeatability of how companies can build, how companies can partner, are starting to see more and more of that actually starting to happen, where 3 years ago, banks would be like, I'm not going to work with a fintech. Now they're like, oh yeah, I'm not building that. I want to find a fintech partner who can do that. So I say we're at the fourth inning, because I think the game's going to continue to change a lot. There's going to be some big hits innings, and there's going to be some 3 up, 3 down innings too.
All right.
Yeah, I think I was going to say fifth inning, so I feel like we're a little bit maybe further ahead than maybe what Gene described. But walking through the history, I think that's really interesting when you think back to where we were. I've been at Morningstar for 11 years, and probably 7 or 8 years ago, we really started to think about, okay, there's these particular set of clients that we've been bringing our data to for decades. What are they actually doing with this data, and what are they? How are they commercializing it themselves? So I think I had a coach, really, Morningstar, that to tell them, we are a fintech company ourselves. We have been providing technology to advisors in the institutions for decades now. So it's just interesting to see how it's evolved. And just at the end of February, before COVID, I hosted an event in Boston, and where we were promoting about a dozen of the fintech companies that we work with, and we're calling it Fintech is Everywhere, which is why I'm wearing this shirt. So I think we're at a point where fintech has become, like Gene said, it's just more ubiquitous. It's flowed into merchants. It's flowed into the way we every day manage our money and look at our credit cards and spending. And then you see more and more the tech giants coming into the scene. Google or Apple with Apple Card and Apple Pay. So I think we're seeing it become more mainstream for sure.
Okay.
Yeah, I was probably going a little earlier. I was thinking kind of third, fourth, just kind of instinctually. I think in part because when we look at the financial institutions and sort of their move to the cloud, there's a lot happening in fintech, but most of the money is still kind of really resides in these large institutions, and they are still, I think innovating and like some of them are moving into the cloud. I think it's now like not a when, not an if, but when they're going to start moving and then be able to drive real innovation. And so I think we'll see more of these partnerships. It's still a nightmare of a process to sell into any of these banks. So I think we'll start seeing more happening there. And I think with the payment space, like we just had real-time payments, those rails are up about 50% of transactions are sort of coming through there. So I think payments still has like a real ways to go. Yeah, I think there's so much more innovation to be had. So I like to think it's the third inning. There's a lot of opportunity ahead of us, but
okay, so a third or halfway through before this is sort of ubiquitous and we stop talking about fintech and it's just sort of what's happening there. So my final question is, if anyone is bold enough to take a 10-second stab of what's the super cool thing that we haven't seen yet, or the thing where this is going to end up, or the nature of these relationships, or that or the products that the Jetsons haven't already invented. Does anybody want to take a stab at like just just any of these surprises that you expect to see as our final comments?
Well, the application of quantum.
Oh, yes.
The application of quantum to
Yes.
financial services. Financial services is just catching up on the AI stream of things, right? And so it's just a matter, of time of when quantum can really totally change any of our transaction world, what financial services looks like.
Yeah. Now, Gene, I'm glad you put that on the table, because there's no question that is going to change everything in the coming decade with a lot of the foundational work happening now. So I'm glad you put that one on the table.
it's hard to compute with that one. I think the other thing will just be like bringing more, like we talked about, like the unbanked in the US, and I think sort of bringing, really kind of financial inclusion. My hope is that like we really take a big leap forward there and kind of bring in more people into the banking system and leverage, or whether it's payments and using your mobile phone, sort of get access to credit. I think there's a lot of stuff happening in emerging markets and in Asia, in Latin America. But I think we can learn from that. So I think there's sort of real opportunity there about bringing more people into the system. Right now, I think we're just creating financial services that are helping people that were already using them. And so I think there's like more to be done.
Okay.
Yeah, I would agree with both of those, and Gene probably hit it with quantum. Maybe building on that, just better use of data sets. Everyone can provide new and interesting data sets to the table that can add value to savers, investors, and anything fintech. I think it's just interesting what's unfolded in the last couple of months. I think we've come to realize that people are bad stock pickers, and the amount of money that has flown into money market funds over the last couple of months is really quite interesting when you look at the V-shaped recovery of the stock market. So we've seen $1.1 trillion in assets go into money market funds over March and April. And when at the same time, the stock market seems to be just going up. And so people are flocking to cash when the market's coming back. I think people need to have better education around sticking to the plan. And there's probably a lot more work to be done around education and products built around overall savings, and building that bridge from savings to investors.
Okay, I have 3 15-second comments to close. First off, the quantum thing has been heavy on my mind as I spend a lot of my time trying to think about the future. If there's anyone in this group who wants to just kick around thoughts and exploring the future of quantum, ping me, because it might be an interesting group within HAE to think about, because that will change everything. Second off, regarding the thing about fintech tools and fraud, someone had a message just saying that taking a look at fintech tools to detect and prevent fraud are much stronger than traditional tools, and mentioned taking a look at Alloy as an aggregator of those tools. So for the person who asked that question, if you're interested in it, that might be something to take a look at. And then finally, just a final message from the HAE, and that is to thank everyone for joining us today, and also for these wonderful panelists who are sharing information about what they see from their different vantage points, helping early stage ventures work with the established players in the financial industry. Don't miss the next FinTech 2020 events. Check them out and register at harvardae.org. And as part of that message, if you're an alumnus and are not yet a member of this amazing community, which was the copy that was written to me, but I will confirm that is the case, please just take a look, because the benefits are pretty significant, from free events to various mentorship programs, whether you are looking for a mentor or would like to serve as one. The programs have been pretty fantastic, so certainly worth doing. So stay tuned for other events, and I guess a number of us will be seeing each other next week with the next session. Thank you for joining today. All right, have a great day.